Yay! Everyone's excited. The Fed decided to cut the rates, but is it really going to help you out, and how long is it going to take? Let's talk about it.
The Federal Reserve made its long-awaited decision on interest rates this week. The Fed decided to lower the federal funds rate by a quarter point. That was widely expected. But many people sitting on the sidelines when it comes to buying or refinancing a home took note of mortgage rates. The 30-year fixed mortgage rate dropped to 6.26%. That's the fourth consecutive weekly drop. It's also the lowest rate in nearly a year.
Everyone is just watching the mortgage rates, man. Everyone's just hawking the mortgage rates, and it makes sense. There's so many people right now that want to buy a house, and they feel like they know the price of a house right now is extremely expensive. And some people are willing to pay the price, but they want one thing to budge, at least budge, which is the mortgage rates. So a lot of people looking at the mortgage rates and hoping that, yes, the house may be expensive, but at least if they get a mortgage rate that's a lot lower, a lot more comfortable than it is now, then it will help them out. And it is sliding down, right? It is going down, which is a good thing. But I'm always skeptical, right? I don't know how you guys feel. You let me know. I'm always skeptical. People think automatically because the Fed decided to cut the rate, is going to just automatically mortgages are just going to drop. And there's so many people out there that got really lucky, and I'm one of them. I shouldn't be ashamed, but nowadays when you pay you have like a 2.75% mortgage rate, kind of feel bad when you see what everyone else is dealing with now. But I am one of them. I have a 2.75% rate. You're hoping that rate drops to that level. I don't know if it's going to drop to that level or how long it's going to take, but a lot of people are really just eyeing the mortgage rates strictly just to buy a home, which makes sense, but it goes back to what I always tell people. Can you afford it, right? Can you afford having a mortgage payment? And is it at least 25% max of your monthly income? Because home ownership, guys, it's a lot, all right? And right now with the mortgage rate being the way it is, you're paying a lot of interest. And there's a lot of costs associated with property taxes, repairs in your homes, homeowners insurance. There's a lot of costs that come with a home. So hopefully you guys are being wise about it.
And still yet, there are growing concerns about tariffs and other Trump policies and their impact on prices of everyday essentials. Let's discuss this all with nationally syndicated personal finance columnist Terry Savage. She's also the author of The Savage Truth on Money.
Now that's a dope-ass name. Savage. Talking about the savage truth. Now that right there is, man, I wish I had a name like that. Doing personal finance with last name Savage. Oh man. That's a name right there. That truly is a name right there. I mean, you talk about finance and you're like, she's being a savage truth about money. That's a great name. I'm sweating that name. I like the name.
Good morning, Terry. Thank you so much for being here with us. I have so many questions for you, but let's start here. Okay. The Fed did the thing everyone's been waiting for and talking about for months now. Interest rates were lowered. What does this mean for the regular consumer?
Well, it depends on which side of the aisle you're on. Are you a borrower or a lender? The Fed, we hear so much about the power of the Fed, but basically they set short-term interest rates like overnight rates that banks lend to each other. They actually have less influence on longer-term rates.
That is very true, man. That's the thing that I always get so people need to understand that, yeah, don't get me wrong, cutting the rate is a big thing, right? It's certainly a big deal. But it's a lot for the short-term rates. It's not really for the long-term. So what I'm saying is for anyone out there that, don't really get too involved with the Fed rates. Some people don't understand exactly what's going on. And they associate the Fed rates being cut, automatically your mortgage is going to go down, which is not the case. But where you will see this, right, happening quickly is with like your CDs and your savings account. So how your savings account, now that they did that drop, you will notice, and you probably got stuff already in the mail or through email saying how your rates are going to drop, like your CD rates are going to drop. All that is going to drop. That does kind of happen within a few days after the Fed's, deciding to cut the rate. But as far as the long-term stuff, right, like auto loans, it's not going to move that much. Because let's be honest, a lot of us now are getting really, really comfortable with the mortgage rates and the rates with the credit cards and rates with getting a car loan. Some people are just saying F it and they're doing it. And a lot of these businesses make so much money off that. So they're not going to be so tempted to drop it unless everyone in the industry starts dropping it. And then due to competition and whatnot, you start dropping your rates as well because you want to be competitive. But I feel like a lot of times a lot of these banks, they ain't stupid. They can take advantage of having these high rates that we've been used to because it's been high for damn near almost 2 or 3 years. It's been high for such a long period of time. And I feel like they're not going to cut it. So for anyone out there who's new to finances, understand, when the feds do the cut rate, you're going to see so much in the news and all these YouTube videos. That's only for short term, right? That's for short term rates. In the long term, yes, it can happen, but it happens at a slower rate. You will notice it more on your everyday, credit cards and car loans and like everyday stuff, like a high yield savings account. That you will notice it pretty quickly, if not now.
The United States has borrowed trillions, like about $38 trillion. That's our national debt. And we finance it by selling short-term IOUs and longer terms, treasury notes and bonds. And the rates on those are set in the bond market. And rates on short-term notes, interest rates will drop. Savers are going to see their CD rate yields drop when they come to renew. Treasury bills are a little bit lower, under 4% now. But funny thing happened on the way. A year ago, when the Fed cut rates, short-term rates, by a full percentage point, mortgage rates went up by 1%.
You see, that's what I'm saying. It's not automatically guaranteed that's going to happen. The economy, guys, is really, really complicated. It's really, really complicated. And a lot of these videos that you see, a lot of people in the news, especially all over social media as well, you see people overly simplify it. Like, oh, the Feds cut the rate and like everything is great. It doesn't work that way, right? In the perfect world, yes, it'll work that way, but the economy has so many things in it right now that could affect the rate. There's so many things right now going on in the market, especially with the job market being the way it is and the job stability. Like there's so much going on right now where it's not just as easy as the Feds cut the rate. Now everything is going to be great. I understand, Trump pushed for it to happen. Cut the rates, cut the rates, cut the rates. But banks, they're a business, right? They're going to do what's right. They're going to loan and they're going to charge a rate for the loans that they're giving at what they're comfortable with. So all said and done, guys, just don't always think as soon as this happens, everything's going to be great. It's not. It takes time.
And just this week, although short-term rates have dropped a bit, longer-term rates inched up in the last 2 days. That's what sets mortgage rates. So mortgage rates dropped in anticipation. We're down about 6.25% on a 30-year mortgage. They may not drop much further if the rest of the world says, wait, there could be inflation in the United States. We don't want to lend at low rates. We're worried about that.
All right. Well, Terry, listen, I'm one of those millennials who has been salivating for a while trying to buy a home. But, I feel like I and many others have been told, wait, mortgage rates are high, et cetera. What's your take right now? Is it more feasible at the least or even the right move today to try and buy a home?
Oh, sure, it absolutely is. If you're secure in your job, and that's the other thing weighing on the mortgage market. There's a lack of supply, and all those people that got their mortgages at 3% a few years back don't want to sell because if they move, they'll have to pay over 6% for a new mortgage. That gap is narrowing now. But this historically, 6.25% is not high. There was a time when mortgage rates were 13 and 14% back in the early 80s, and people still bought homes and waited for rates to drop and refinance.
That is very true. I wasn't around during that time, but I've heard so many people discuss that about how high the mortgage rates were back in the days. I mean, in the teens. You imagine that now, you're like, come on, that is insane. No one will ever be able to buy a house with mortgage rates being that high. But to put this in perspective, 6% to some people, as far as someone who've been around during those times when mortgage rates were that high, they recognize it's not that high. Right? 6% is not that bad. You guys can let me know how you feel about it. Because me, personally, I feel like 6% is a lot. I feel like 6% is a lot. And a lot of people waiting on the sidelines, to buy a house, hearing that 6% is not that bad. It's like, it is still pretty high. But I want to say this. The thing that matters, the mortgage, right? I'm going to say something, you guys let me know if you agree. The mortgage rate, it matters. Don't get me wrong, because the amount of interest you pay. But really the most important thing is if you're buying a house that you could afford, and this is the house that you want, and you're not thinking of buying a house as an investment. You're thinking about, this is a house I want to buy. I could afford it. Like I said earlier, 25% of my mortgage payment is less than monthly income. And I like this place, then go for it. the mortgage rate shouldn't be the only indicator if you could afford it or not. Now, the mortgage rate obviously will change the amount of payment you can make. But it's true, as you said, you always could refinance later on down the road to decrease your actual payment, right? So there is that option. So that's the thing. People think just buying a home, you buy it and that's it. For the rest of your life, this is where it's going to go. Your mortgage payments will stay the same and you're good and that's it. It's not always the case, right? For some people, like myself, I'm lucky. I got 2.75%. I am not going to refinance. No need for me to refinance. But that is just one way, right? That's my way and people who got that rate. But it doesn't mean now for anything that's higher than 2.75, right? Even in the 4s and the 5s, mean that, hey, maybe on the future it might drop and it might not. But if you're getting a mortgage, and I highly recommend tell this to people as well, and I warn you, if you're getting a mortgage strictly just banking that's going to go down in the future, so you're willing to be house poor now and say, you know what, I'll struggle now because in the future it's going to go down. Now, that's not the right way to do it because you're not going to be able to save, you're not going to be able to invest, you're not going to be able to enjoy life. And that's a risk. That's a big time risk you're taking that you're hoping the rates could go down. Because guys, I'm being honest with you, the rates could go up to the teens again. It could. You don't know where this is going to swing. And then you would say, I should have got it when it was 6 rather than when it was 10. You know, that's why you gotta just throw all that away. Sit down and say, can you afford this house? And do you really want this house? Do you want it for a lifestyle or for an investment? If you're strictly thinking in investment purposes, then yeah, you could find other ways to try to avoid buying a house now and wait, whatever the case may be. But you just have to make sure you could afford this home. That's it, really. It's affordability. Can you afford it? The mortgage rate is just that. Don't worry about it. Can you afford this home? Yes or no?
So if you're comfortable and secure in your job, which is something many people aren't these days, then you should go out and grab the 6.25.
Yeah, it's the risk that you're taking because right now the job market is crazy. It is crazy right now. And job layoffs just seem to happen in all industries, unless you're like a nurse. If you're a nurse, and you're good. But any other industry, we're all worried, man. With AI coming out, replacing so many things, so many people are worried. So, job stability, who feels good in their job right now? I'll be honest with you, I don't feel that good at my job right now. A lot of us don't. And just feeling like, oh, I feel good to just take this mortgage because I'm in a stable, there's not a lot of stable jobs out there, really. Like I said, unless you're a nurse. Everyone's getting sick. Everyone needs to go to the hospital. It feels like every month or two, I'm seeing like an urgent care being built. There's all these doctor offices around me. So yeah, for a nurse, I guess I'll feel okay. But for everyone else, right, in the business industry, finance and accounting, we're all a little worried. So that's why, man, just hearing the feds cut the rate doesn't mean, yeah, I can finally get my house. There's a lot of other stuff, a lot of other variables that you need to really take into consideration before you make that decision. So guys, drop a comment down below. Let me know, the feds cutting the rate, is it really that big of a deal for you? Or do you feel like, yo, everything's still expensive anyway? Eggs, groceries, everything is so expensive. It really doesn't matter. You want to see a bigger cut and see everything, the cost of groceries and inflation just go down to a bit where you can enjoy life. And caring about the mortgage, caring about the Fed rates cutting, how big of a deal is it within your household? Drop a comment down below, guys, and let me know. And at the same time, hit the like, leave a comment, and subscribe. Catch you all on my next video. Peace.